Okay, well, thank you for participating this morning, and it's a pleasure to be back. This is a nice tradition. I'm pleased to appear at DAC every year, and we do have some new things to say from last year's presentation just 11 months ago, but a lot of interesting things have happened in the industry. One in particular will be the subject, or a subject, of the session right after this, which is the panel, which I hope you'll attend as well. So these are our criteria by which we evaluate EDA, and of course, more broadly, all of software. We don't confine ourselves to these criteria solely to EDA, but certainly some are particularly germane to this industry. Bookings, which we spent a lot of time deriving and forecasting for the industry, are of particular significance, of course, also elsewhere in engineering software. But for those of you who do see our research reports, you know that we spent a lot of time on this particular subject. Revenues, which we'll show in a moment. And the main message is that EDA has continued to do very, very well. And this has been going on now for over a decade. In fact, we've been recommending the shares of Synopsys and Cadence now since 2011, as we have been recommending the names of some of our other companies as well. And that reflects our fundamental belief in the viability, the execution, and the future prospects of this industry, which we think are frankly quite compelling and in many ways increasingly unique, hence their valuations. As you can see, the market caps of EDA have continued to expand significantly. A decade ago, the combined market values of what were then still three publicly held companies, Cadence, Synopsys plus Mentor, was less than a tenth of the current value of Cadence and Synopsys alone. And so Siemens has certainly gotten value for its investment in Mentor, but in terms of the publicly traded companies, we can see that Cadence and Synopsys shares are up significantly just from a year ago, and certainly over the last decade. And I think this is a clear reflection of investors' understanding of the growth prospects here, the essentialness, which is a key word that we use frequently, of EDA to enable what's been going on in semiconductors and increasingly as well the systems world, which, as you know, is a subject of this year's conference in particular. The essentialness has to do with the fact, quite simply, that there continue to be arms races amongst the customers, both at the silicon level and at the software level. And what's become increasingly evident is the joining of those arms races, silicon and software, not for the first time. I've been following tech now for over 4 decades, and it's not the first time that we've seen this conjoining of the importance of software and silicon development, but it's certainly magnified significantly now. And this only significantly enhances the essential role that EDA plays. So last year we forecasted that EDA would surpass $13 billion in 2023. That forecast turned out to be correct. And for this year we are forecasting over $14 billion. The variability, as always, will depend in no small part on how Siemens EDA performs, given the fact that their revenues are still predominantly upfront for Caliber and PCB, for example, in particular. But clearly, as Mike noted, there's been growth in the Siemens EDA business since the acquisition now over 7 years ago. We calculate that Siemens EDA has grown by over 50% over the last 7 years. Again, with some variability along the way per quarter, but the underlying trend is quite clear in terms of its growth, along with the growth of Cadence and Synopsys and Ansys EDA and the other smaller players. Hence, we are looking for another strong year of growth this year, and importantly, further backlog growth for Cadence and Synopsys. This is EDA, right there. This is 15-year plot of the industry based on data from ESDA, formerly EDAC, and this is a combination of design automation software plus IP plus hardware. And as you can see, There's been an inflection upwards over the last number of years from what had been an extended period of single-digit growth now to double-digit growth. And so this is a new phenomenon in the industry. Along with that has been a significant increase in the operating profitability of EDA, which again explains the increase in market value. And as a point I've made the last number of years, and I think it's important to reiterate, is that the profitability of EDA has caught up to and surpassed that of its counterparts in the other half of engineering software, also known as technical software, which is, I think, one of the most interesting changes in terms of the financial profile of the industry the last number of years, where historically the CAD and PLM and non-EDA simulation companies were, on average, considerably more profitable than EDA. That's now inverted. Those companies remain highly profitable, of course. They've not degraded their profitability. EDA has simply caught up and gone past them to what we think will be, together for Synopsys and Cadence, roughly 40% operating margins, which well above levels 10, 15, 20 years ago. So industry has continued to consolidate. Again, reiterating a point that we've made the last number of years in giving these presentations, but it remains very much the case. Based on the most recent industry data, Synopsys and Cadence had just over 70% market share. Then you add in Siemens, you add in Ansys, that's 90%. A little bit higher than it's been, not by much, but that is considerable industry concentration, far more so than we see elsewhere in at least the areas that we cover. This is the plot of the big three together, as you can see. And even taking into account the variability of Siemens' share as they recognize more or less revenues per quarter, depending on contract renewals and the like, the fact is that the three together have increased their share of the industry. And this, we think, is a phenomenon reflective of technology trends, namely the fact that we have multiple EDA product categories growing coincidentally, such that each of the big four, Synopsys, Cadence, Siemens, and Ansys, are participating in at least two categories of growth, in some cases more. This is reflective, in fact, of what we think are irreversible technical requirements on the part of the customers. Therefore, we're going to continue to see multiple product categories continuing to grow over an extended period of time, coincidentally, for each of the top vendors. This is a point I made earlier about the arms races, that, again, we expect this to continue. And again, we see this not only in the case of some semiconductor companies where NVIDIA, in just the last few months, for example, repeatedly is making the point that they're not just a GPU company, but they are a systems company based on some of the recent product introductions that they've shown. And certainly in their case, that's very much true. But then, of course, there are also the data center companies, where Microsoft, Google, Amazon clearly investing in their own semiconductors. This has been true now for a number of years. And then, of course, the automotive companies and that whole ecosystem investing in semiconductor and systems technology. And one of the more interesting things about the way the EDA companies are reacting to that is how just 5 or so years ago, Cadence and Synopsys did not really display much interest in automotive end markets, and that has significantly changed now, where they are clearly very much motivated on working with systems customers in automotive, and so this is a significant change in go-to-market approach, customer support approach from just 5 or 6 years ago. The reason being that they perceive the automotive technical requirements as now being similar to that of other leading edge end markets, where previously that would not have been as much the case, at least as far as the semiconductor requirements are concerned. So, in other words, a whole new addressable market for them that is helping also to drive their growth. So this, I think, remains an essential point. I've made it before, I'll have to make it again. If you go back 2 decades or so, when there was growth in EDA, there were 2 characteristics looking back. Number one, it was very narrowly confined to 1 or 2 product categories, which would have run their course of growth. That was basically it. A couple of growth categories. It was not broadly based, and the growth, therefore, wasn't sustainable. That, coupled with the fact that we didn't have subscription models back then, and you had not a ton of pricing discipline in EDA at that time. And so the financial profile of the industry 2 decades or more ago was not particularly compelling, which is one of the reasons that at that time, in the early 2000s, the enterprise value to revenue multiples were so much lower than they are today. There's been a significant expansion of those multiples because the quality of the financial profile of the companies has materially improved. Recurring revenue through subscription models, growth of backlog with consistent positive book-to-bill for 14 years now, since 2010, and the margin expansion that I mentioned earlier. The EDA AI ML question. So, a few things. One of the things that's interesting about EDA AI ML is still relatively early. We've had some data points from some of the vendors, Synopsys in particular, as far as revenue contribution is concerned. But within the overall context of engineering software, I would say a couple of things. Number one, EDA seems to be further along than its peers elsewhere in engineering software. For example, the technical or industrial software market, or the architecture, engineering, and construction market, all of which are moving towards that, but are not as far along as EDA so far, where there's evidence already of reasonably substantial production adoption of these new technologies, these new methodologies in EDA, with obviously a long way to go. A couple of other points more broadly about this than just EDA. At least as far as our coverage is concerned, we think that there will be more of a B2B than B2C impact. For other companies we follow, like a Microsoft or Adobe, both will be true. Large B2B impact, large B2C impact, but obviously for EDA, there's really no meaningful B2C, significant B2B impact. Also, we make a qualitative distinction between AI and ML, where in the case of AI, we think about it as more conversational, natural language input, specification input, whereas for ML, it's much more of pattern recognition, and critically for this industry, optimization. A counterpart technology, for example, in technical software, mechanical CAD, was known as generative design. Perhaps one of the first instances in engineering software of this kind of optimization technology, which has had great value for products in the discrete manufacturing industry. And so the point being that clearly in EDA, simulation, verification, optimization have enormous value. It's very clear when you just look at the industry revenue and category breakdown. So the ML/optimization phenomenon, we think, will be a driver, particularly in this industry. And then we'll just have to see how it evolves as well for your cousins in the rest of engineering software. So this is a 15-year plot of EDA around the world. The US remains the largest, as you might expect. But as we noted earlier in previous talks, non-Japan Asia has now become the second largest market. That's China, Taiwan, India, Korea. And much of that green line, the Asian number, is driven certainly by core EDA software, but also to no small degree IP. China, for example, according to industry data, has become the second largest market for EDA IP after the US. This is that breakdown. As you can see, the breakdown for the countries I mentioned in Asia, China in particular, obviously a very significant revenue phenomenon. But That, of course, includes a great deal of upfront revenue for IP, to some extent for hardware. And so that could conceivably be a revenue timing risk, at least, for some of the companies that have become very much tied to that EDA IP upfront revenue phenomenon in China. This is a trailing 12 months for IP. As you can see, the difference between China, the upper line, and everybody else in that part of the world. Significant difference. And this is the big three for the last 15 years. And Cadence and Synopsys have continued to increase, as you can see. At least of late, you can see that it's been a bit of a down and to the right trend in the Siemens EDA number. We think that is largely tied to contract renewals timing, and it's not, I don't think, a fundamental technical or competitiveness issue. It's really tied to the periodicity of large contracts. They did, after all, in the third calendar quarter of last year, the fourth fiscal quarter of Siemens' fiscal year, have a record quarter for their EDA business, more than doubling sequentially, which they'd never seen before when Mentor was public or since. So from the June quarter last year to the September quarter last year, Siemens EDA revenue more than doubled, and nearly doubled year over year as well. And that was obviously due to some substantial contract renewals. It reverted back into the December quarter, went sideways in the March quarter. So the point being, they're clearly holding on to some very large customers with some very large renewals, but it really depends on the quarter. I won't read all of this, but the point being that EDA bookings for the two largest companies has continued to grow quite nicely. We expect another large increase this year, and consequently, their backlog will grow, and consequently, they will continue to be able to reinvest, crucially, in R&D, which obviously is very important for your future, for their future, and EDA, we expect, will continue to invest well over 30%, perhaps over 35% of their R&D, of their revenues rather, in EDA R&D, and this is an essential part of their ongoing competitiveness. And is also, by the way, also a distinction between EDA and the rest of engineering software, where the average percentage of revenue at R&D is closer to 20 to 25%. A very different business model. Again, this refers back to the bookings number. So just over a year ago, in late 22 into early 23, there were two very large contracts, each with Synopsys and Cadence from Intel, which remains by far the largest commercial spender on EDA. And so this is just another way of showing that backlog is growing. Blue line bookings, orange line revenue. And so one of my favorite numbers is backlog, as I mentioned earlier, which means that one of my favorite three-letter acronyms is RPO, which stands for Remaining Performance Obligations, a multisyllabic way, courtesy of the regulators, that defines backlog. And this is a number that the companies must report, in addition to which they must report how much of that backlog is going to convert to revenue over the next 12 months. This too is a crucial number, because we can take that next 12-month expectation, which they can calculate readily, and compare that to total estimated revenue for the next 12 months, giving us, therefore, what we would call a coverage ratio. And the numbers do vary. So there are some companies that perhaps a third of their next 12 months revenue coming out of backlog, some companies half, some companies more. In our group, Cadence has among the highest percentages of total estimated revenue for the next 12 months coming from backlog. Synopsys, not quite as high a percentage, but still very high, in the middle group, let's say, of those percentages, and other companies somewhat lower. But again, for our purposes, in terms of assessing financial profile differences among the companies, next 12-month conversion of backlog to revenue is one of the most important metrics because, as you might expect, higher percentage is a good thing because it gives us revenue visibility, and investors obviously like that. So this is the compound average growth rate for RPO over the last number of years, mid-teens. If you go back 5, 6, 7, 10 years, this would not have been expected. We would have expected respectable single-digit growth, but this is a fundamental change, at least through the first quarter of this year, in the growth characteristic of that backlog number. And so long as this persists, we think the valuations will continue to remain high, and we think investor interest in EDA ought to remain high as well. This is our forecast for backlog through next year. So this is also a 15-year plot of backlog. You'll notice the inflection, and we're looking for well over $15 billion of backlog for Cadence and Synopsys together by the end of next year. 15-year plot again. Actually more, sorry, goes out to 2025. This refers back to the margin comments I made earlier. So again, you see profitability substantially improved. This is the difference in margins between the big two. Now, Cadence is higher for two reasons. Synopsys has a higher percentage of IP revenue. They are the largest by far in IP revenue, with anywhere from 2.5 to 3 times IP revenue as compared to Cadence, but it is a lower margin business than core EDA. Core EDA meaning just software. And also Synopsys is higher hardware business. Now their margins are similar, I think, to Cadence's hardware margin, but it's a higher percentage of their business. So just margin mix arithmetic, their margin would be lower, but in any case, clearly trended higher over time. And of course, there was the opportunity to improve the margins in IP over time. Either way, this is a significant improvement over the last 5, 10, 15 years. This is the two together. This is a great chart because obviously substantial more profitability is a positive for EDA share valuation and the ability to reinvest in sales, R&D, customer support, and that in turn engenders further growth, further adoption, and so forth. Cash flow, the ultimate outcome of everything the companies do, not just EDA, but all of our companies. When we issue a price target on our stocks, which we do only for our buy-rated names, not stocks we're not recommending, cash flow is the ultimate metric because of the discounted cash flow method. And so as you can see here, quite good growth for cash flow as well. And we forecast this to continue through at least next year. The two together. This point I made earlier, but I'll repeat it, that each of the top EDA companies is participating in at least 2 categories of growth. And as we've shown in our industry reports, there is clearly in some categories an increase in correlation among a number of the categories for unsurprising reasons. RTL simulation and synthesis, place and route, and physical verification, for example. Core EDA is an interesting one. As a reminder, our definition is total EDA revenue minus hardware minus IP. It's just software. It's the biggest part of the business. And this is where much of the acceleration of growth has occurred. Synopsys continues to be larger. Cadence has narrowed the gap, but not completely narrowed the gap. A couple of years ago, before Synopsys began disclosing its IP revenue, we had to derive that and therefore infer the core EDA numbers as well. It looked as though the gap was narrower than it really turned out to be. Once Synopsys began to issue its IP numbers, we recalculated, I made this point a year ago, and we show that indeed Synopsys remains larger in core EDA. The gap is narrowed. They're both growing very nicely, double digits each. But again, Synopsys roughly $100 million larger on a trailing 12-month basis, based on the most recent trailing 12-month data. This is that. And so you can see red line getting a lot closer to the blue line, actually purple, Synopsys. But it's not quite there just yet. Mentor generally up, of course, because they participated in the overall growth of the industry. That's the gap between Cadence and Synopsys. It's still above zero, as you can see. And it will move around, partly because of revenue recognition timing, to some extent acquisitions. Synopsys periodically will have a 53rd week in a year, which will add some revenue, but our numbers normalize for that, by the way. This is what I mentioned earlier. There's a lot of parallel growth here between these two categories. Same for this, although, as you can see, the physical verification line is more erratic because of the caliber variability of revenue, but still, again, generally up and to the right. And so hardware has become a very interesting growth category. It's been around for over a quarter of a century. For much of that time, it was not terribly compelling as a business, but it has become compelling. And we put it under the category or description of essentialness that we ascribe to Core EDA itself. And we can see this from the revenue growth of hardware. We can readily calculate the Synopsys and Cadence numbers. We could also do the same for the Mentor numbers, Siemens EDA. And this is a more than $1 billion category. So that's a significant increase. Again, the margins are lower than software, that's fine. But this too has become increasingly conjoined with the business of software. And where in the past, hardware might have been quasi-optional, in many ways it no longer really is for both semis and systems customers. That's the blue line is ZeBu and Palladium. Red line is HAPS and Protium. And as you can see, significant growth. This is all together. So it looks very much like the Core EDA number, doesn't it? You know, it's not, again, as profitable, but very similar, parallel kind of growth. This is IP, an even bigger category, over $2 billion versus over $1 billion for hardware with a higher margin. And also significant difference, a larger difference in market share. Last year, Synopsys was number 1 in hardware, Cadence number 2. You know, reasonably large difference, but this is a much bigger difference, where Synopsys' revenues, as I mentioned earlier, 2.5 to 3 times that of Cadence and IP. And as you can see, Synopsys had more growth of late. Some of that driven by China, but not only, but in any case, more growth. That's the combined number. And obviously there's going to be some variability, occasionally a sideways number, because over the last number of years, because of new revenue recognition requirements, IP2 has become subjected to more upfront revenue recognition requirements. And so unlike, let's say, the Core EDA software business, which is generally more smooth or linear as a subscription business, IP turns out to be, again, more variable. Again, underlying growth, but you will see variability. And as I mentioned earlier, a lot of the revenues for China IP are as a result of its having to be taken upfront immediately into revenue. Important to talk about EDA R&D, which I mentioned earlier. I always talk about it in this presentation, and I think it's important to continue to do so. So you can see here that we expect roughly mid-30% of revenue to be reinvested in R&D. We have approximated Siemens EDA's R&D. They don't break it out. We do it for them. And so we think that approximately half of the total Siemens Digital Industries software R&D is being spent on EDA. The other half, obviously, on the other technical software part, CAD, PLM, simulation, manufacturing software, But this number, roughly, again, 600 million, would be approximately equal to 30% of what we think Siemens EDA's revenues are, which was just over $2 billion for the most recent period. And by the way, in its last year as a public company, Mentor's revenues were 1.28 billion. So more than $750 million increase in Siemens EDA's revenue over the last 7 years, mostly from Mentor, plus some small acquisitions, but again, considerable growth. This is the plot of R&D by company, and the blue dashed line is the percentage of revenue. And as you can see, generally stable. You know, a little bit of downward movement perhaps as a percent, but not by much. And certainly sufficient, we think, to sustain the product development strategies. All right, a few last things. We also talk about semi-R&D as an important input, obviously, to the EDA companies. This is still their principal source of funding. And we have seen that EDA, as a percentage of semi-R&D, has been increasing. The denominator total semi-R&D, which we calculate, we publish on that. EDA, obviously, a readily available number. And the percentage has been increasing over the last number of years. Now, of course, some of the growth in EDA in the numerator is systems customers. But even allowing for that, this trend would look the same, that EDA would have been increasing as a percent. And one interesting observation just the last 4 to 6 quarters is through the first 3 quarters of last year, Intel's R&D declined sequentially before rebounding in the fourth quarter of last year and into the first quarter of this year. Nevertheless, their EDA spending continued to increase. So last year, and on a trailing 12-month basis, EDA will have increased as a percentage of Intel's total R&D spending. Still less than 10% of the total, but a higher percentage nevertheless. And that's important because Intel remains by far the largest spender on EDA in the neighborhood of $900 million, which, by the way, is also up by about half from just 3 or 4 years ago. Significant increase driven by core EDA plus IP plus hardware. So a couple of years ago in this talk, I noted the acceleration of semi-R&D spending from a very languid single-digit growth to multiple quarters of double-digit growth. I refer to that as the great inflection. It's still pretty good, maybe not quite as great, because there have been some semi companies whose R&D growth has decelerated. Others have increased, notably NVIDIA, which, by the way, is now the second largest semiconductor R&D spender after Intel, having surpassed Qualcomm within just the last year. And so perhaps not quite the inflection that we would have seen a couple of years ago, which was due to Intel in many ways, but still quite good and sufficient to sustain the growth of EDA bookings, we think. So this is just a year-over-year plot of semi-R&D growth year over year. As you can see, there's that great inflection, upward movement, bit of a topping out, some downward movement, a little bit of a re-inflection upward, but not quite where it was. And this is, again, EDA as a percentage of semi-R&D, variability due to revenue variability on the part of EDA, but general up and to the right trend, as you can see. This makes it easier to see. Intel R&D. Look at that NVIDIA line. It's really, really impressive how it's grown. Okay, just want to conclude with a couple of observations on EDA headcount. One of the things that we do, some of you may remember, is we track every month the open positions at each of our companies, not just EDA, but all of our companies, Autodesk, Microsoft, Adobe, et cetera. And over time, having done this now for 144 months, is we find this data to have some very interesting coincidental and leading indicator value. In the case of EDA, we track, as we do for the other companies, total openings, total by geo, R&D, sales, and make certain inferences from those data over time. As you might expect in the case of EDA, the largest number of openings is always in R&D, then AEs, then way down the list, sales. And so some interesting things to show. So this is the total openings. As you can see, there was a significant increase in Synopsys openings within the last couple of years. Those have moved down to become more similar to the Cadence and the Siemens openings. This data is very fresh, end of May. This is R&D. Again, the largest number of openings. AEs. As you can see, within the last number of years, there's been a considerable investment phenomenon in applications engineering headcount. Generally a good indicator in terms of customer adoption of new technology. And presumably, or at least all else being equal, with respect to AI and ML product adoption, there will probably be significant AE support requirements or incremental support requirements for that as well, which is what makes the numbers on the right very interesting in terms of some of the recent increases, although albeit not quite as high as they were. This is for everybody. Another way to look at it is AEs as a percentage of total. And again, some significant variability among the vendors. As you can see, considerable variability. But this is everybody. Slight upward movement to the right as a percentage of total for all in EDA. Also, there's a significant difference in AE openings by region. Synopsys, for example, very heavily weighted towards Asia, far more so than its two peers, as far as AEs in Asia are concerned. Now, this is a very interesting recent phenomenon, also true for many of our other companies, where there has been a significant shift in terms of openings in India as compared to China. EDA in China, in terms of openings, has always been, with the exception of Microsoft, significantly higher than for any of our other companies, in terms of total, in terms of percentage of total openings. So China has always been a significant part of the total prospective job filling for EDA. And it still remains fairly important, but clearly there's been a mix shift to India as well. Elsewhere in our coverage, for example, in the case of Microsoft, not shown here, we've seen that over the last year, the ratio of Microsoft India openings to Microsoft China openings has gone from about 5x a year ago to now 10x. Big difference. That too would make an interesting chart to show, but they're not part really of EDA for this purpose. In any case, this I think is really interesting. Open to interpretation, perhaps some risk mitigation going on here as far as the China openings are concerned. Again, considering the fact that there are certain, obviously, well-known issues with regard to geopolitics and regulations and the like. I'll go through this very quickly. This is just ANSYS EDA through next year. ANSYS's bookings by end market. High-tech is their largest end market, including semis. Cadence revenue through next year. Synopsys revenues through next year, excluding the software integrity business. And this is a closer look at just design automation for Synopsys. Obviously good growth. Intel revenues to Synopsys. Revenues to Synopsys ex Intel, ex the software integrity business. Also quite good, obviously. Thank you very much.